Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Connor Campbell, financial analyst at Spreadex, and we're going to look at the great British pound versus euro. Lots going on. Germany, Brexit talks, backwards and forwards. What does that actually mean for the currency, and what does that mean for your traders that are actually dealing in this?
Yeah, it's the pound did quite well against the euro last week, given that the data wasn't particularly great, but it's sort of, I think it was more that it was coming off some sort of nasty lows, and that was enough to propel it to propel it higher across the week, despite the weak sort of inflation and retail sales and wage growth, and sort of all of those things that make it a pretty nasty environment for UK consumers heading into Christmas. In terms of this week, obviously on Monday, you had the German political uncertainty. That hasn't been fixed yet. That I'm sure that's going to rear its head at some point this week again, be it the formation of a coalition or a minority government, or I think I was looking at the way it works. I don't think Merkel can just call a fresh election herself. I think there are some few more steps before that, but she did hint yesterday that she would prefer that than a minority government. So obviously I imagine probably wouldn't greet that news with much glee, and I think that probably would take it a bit lower. Obviously, you also got the autumn budget on Wednesday, and the OBR forecast and things like that. Any revisions down to that, I imagine, will soften up the pound a bit. And you've also got the second estimate UK Q3 GDP figure on Thursday. I think that's expected to remain at 0.4%. Obviously, any movement around that figure will then cause movement for the pound. In terms of our clients, they've been selling, obviously, so buying the pound, but selling around that 0.8875 mark. I think largely on the idea that of all of these things, if the German political situation gets any worse, or if it doesn't look like it's heading to a new election, I think that will be the dominant story, even over the budget and stuff. I think obviously the nitty gritty of the budget could well affect more the FTSE than the pound, depending on what sort of sectors get a boost or take a knock, depending on what happens said. So I think that is why our clients are selling the euro, buying the pound around those levels, mainly due to the unresolved German political situation.
And just quick on, I mean, if we look at, obviously this is a couple of weeks there, if you actually look at the volatility, considering the news flow that's going on both sides of the channel, it doesn't actually seem that volatile. Is it a case of people are putting trades on but a bit tentative and a bit aware that something could come out, or are we in a range? As I say, considering the political situation, that seems fairly steady within a range.
Yeah, I think there's always other stuff in the, if you zoom out a bit and you've got Brexit, so that's always going to temper investors' enthusiasm, I think, especially on the pound side of things. Like, it's only going to go so far. It's only going to be able to take so much back off the euro, given that there is always, a news story can pop up about Brexit and wipe out 0.5% in a day or something like that. Obviously, you've seen, seems to be a bit of progress today, with the cabinet agreeing to pay a high divorce bill. So if that unlocks talks, and if that gets things moving again, then maybe towards the end of the year the pound can gain a bit more momentum. But like you said, yeah, it looks a bit choppy, but then if you zoom a bit, it always sort of comes back around that sort of 0.88 mark, really. So yeah, like you said, I think there are other issues at play that even on a week-to-week basis, if they're maybe briefly forgotten, they're always going to be at the back of investors' heads, just before they click that order button, preventing them and maybe causing them to think twice.
Maybe trade the ranges in the meantime on this one. In the meantime, Connor, thank you very much for joining us today.